Thank you, everyone, for joining me today. It's very exciting for us to kick things off with a panel on collaboration. We've got different perspectives from across the value chain here, and very excited to talk a little bit about how you're seeing collaboration happen, where it breaks down, and where we're seeing successes, practical examples, and then we'll talk a little bit about questions from the audience if we have about 5 minutes at the end. Please feel free to use the Slido app to submit your questions. I'll be able to see them here, but then also we'll open up to the floor for about 5 minutes at the end if you have questions that you want to ask. All right, let's kick off with a general broad question across the panel. How are you defining collaboration in your organizations, and where do you see it breaking down across the ag value chain mostly, and why? Leonardo, may I ask you to jump in first?
Sure. So from our position in the supply chain, our first job is to really listen to the customer, what they really need. And then because we have the direct relationship with the farmer, then trying to answer your question where it breaks down, one of the points where we see it break it down is we've come a long way understanding the farmer better, but there is still an oversimplification of the farmer. You need to understand that each farmer has different challenges. They may have different market access. They may have different soil type. They may have different, even exposed to different policy making depending on the country, the province, the state. So that's number one. Then I think pretty critical to make sure that the incentives across the supply chain are aligned. Data can be a barrier as well. And I think, lastly, I would say probably time horizons are different. When you talk about incentives in an oversimplified way, you're talking about the quantum or the absolute return versus risk versus time horizon. If you expect, I guess I would say, if you expect an outcome immediately without de-risking where the risk is, you will lead to breakdowns.
Yeah, I definitely want to jump into incentives at the next point. But Richard, I know we've talked about time horizons in previous conversations. Would you like to share a little bit about what you're defining as collaboration across the value chain, and where do you see it breaking down?
Yeah, sure. So we're a European innovation agency, obviously focuses on innovation. And the collaboration space is where there's a public good, in effect. Where are we trying to raise the tide for everybody, as opposed to kind of classic innovation, where are you trying to win commercially or from a business sense? So that the collaboration is happening increasingly much more comprehensively, where there is effectively a shared benefit for the whole value chain. It's not easy. So where does it break down? I'd say the singular place is where the risk is not balanced. I mean, Massimo talked to it. For us at the moment, we see still the vast majority of the risk sits behind the farm gate, honestly. If you really look at it, whose life is on the line, whose house is on the line, it's the farmer. It's not us, frankly. So that's, as that collaborative space needs a truly shared risk approach, I think that will be the transformative unlock for much richer collaboration. We know where the space is now, but we've got to get that risk balance right.
Yeah. As the farmer on the panel, Abi, can I ask you to jump in?
Yeah, so collaboration across the supply chains is about sharing risk and responsibility, not just chasing the lowest cost. And I think that's absolutely key. And we've just heard farming businesses, a lot of decisions are taken around a kitchen table. They're not in a boardroom with a host of representatives from different departments. They're taken by people who've had a long day and are sat down probably next to their tea that's a bit late, trying to decide what they're going to do next, and trying to share that risk throughout the supply chain is going to be absolutely key. And we've got two angles really we can look at. We've got the farmer, processor, retailer or food service chain, but we've also then got the other effect on farmers, which is going to be government policy. And all of these decisions need to be pragmatic, and they need to be done with farmers, not to them.
Yeah, I definitely want to talk about policy and long-term commitments and what the role of the government is as well. That's really critical. But Daniella, I'd love to ask you to chime in.
Yeah, sure. So Ahold Delhaize is a group of food retailers. So from a retail perspective, I think a lot of the trends have been raised already. For me, definitely where it breaks down is a mismatch between the timings and the speed. So as a retailer, we're working day to day, and as you said, farmers are long term and making decisions around the kitchen table about land, about soils, about where to invest their capital multi-year. So there's a mismatch in speed. I think secondly is definitely the risk, and where we see it breaking down is where the risk is all on the farmer and not across the value chain, and also where we see it working is where that risk is spread. And then finally I think looking at projects and investments from beyond a pilot stage. I think this is a huge challenge, not just for retailers, but across the value web, of moving this kind of thinking in pilots to thinking in systems and what's good for systems.
And so all of you raised a good point around risk. There's a mismatch in risk at different nodes of the agricultural value chain, and that's usually where it breaks down. And we also sort of agreed that the farmer takes the most risk. How do we smoothen that risk across the value chain? How do we de-risk farmers in order to be able to innovate better?
So I think, you need to design programs that work for the farmer, with the farmer. And I think that means sending economic signals that the immediate risk that the farmer will have, oftentimes they will have benefits too of adopting regenerative practices, but first they don't know for sure. There is a real risk and there's also perceived risk. And the benefits accrue over time. It may be 3, 4, 5 years down the line, whereas the reward of an outcome may be immediate for somebody down the supply chain. So I think you need to send economic signals. You need to offer agronomic support, training, those types of designs that work with the farmer and within the system have been more successful.
Daniella, would you agree in terms of?
Yeah, I think for me, from a retail perspective, it's about long-term thinking. And so when I think of the projects that are really working, it's that multi-year, it's that shared benefit. And it's the where it becomes a relationship instead of a transaction. And we've got an excellent example in the Netherlands, the Beter 4 program, where we work with 450 dairy farmers, looking at the impacts on farmer livelihood and nature. And here we find farmers that are more likely to want to take the risk because we're investing in them multi-year.
Abi, would you like to chime in?
Yeah, so it's definitely reflecting that long-term planning. As a dairy farmer, I will have had a calf born this morning. It will be 2 years before she comes into the herd as a fully grown adult, and a further year after that before we start actually turning a profit. So you're talking very long-term. If you look at crops, you could have a situation where the industry has severe drought or flooding. That could have a huge impact on their ability to earn a profit in that year. So we need that long-term outlook to help cushion these farmers so that they can survive into the future. We've got the dairy sector at the moment that is going through a huge amount of disruption, and it's essentially going to come down to who is going to survive. We can't have that situation. Farmers need to have confidence to be able to invest.
Yeah, Abi, just to follow up on that, one of the interesting insights from the breakfast this morning was that, yes, long-term is great, but if I'm struggling to make margins on a day-to-day, I'm now thinking about the long-term. How would you respond to that?
Well, again, so the farmer's always going to be thinking about that. It's the case of the processor, the retailer, and food service. Food service doesn't often come into this conversation, but it really needs to. They need to be thinking about how long-term these farmers are. And if somebody needs to offer them commitments for further net zero or to look at biodiversity, actually, there needs to be a lot of thought about how long-term that is going to be and what investment you might have to put into that business, particularly if it's technology, because it's just so expensive to cost into your business.
It's a high investment cost. Richard.
Yeah, we definitely see this. It's changing, but it was very primitive at the start. So we've been working with landscapes on regenerative transition. And at the start, basically companies were going, I want a regenerative carrot and I want it next year. So, well, okay, just think about what you're actually asking for. We can stick a label on the carrot, but it's going to mean absolutely nothing unless you've had 7 to 10 years of understanding of what's going on your farms, in the soil, in the carbon cycle, in the water cycle, with the biodiversity. So that expectation was kind of version 1 of regenerative transition, probably 3 years ago. It's evolving now, but there's a hugely mixed profile of innovation in that change. There's amazing innovation in technologies like MRV on the farm, in what farmers are doing. Forgive me, but there's zero innovation in the finance sector. So when it comes to the flows of capital and cash flow coming into farms, there's nothing different to finance 20 years ago, other than possibly a discount on carbon, maybe if you're producing some form of carbon credit. But there's no real innovation there. So that to us is a huge opportunity of really change the way the money flows to the farmer based on the risk they are taking for 5 to 10 years ahead.
Yeah. Yes, Abi, go for it.
Yeah, so if I suppose really to add to this, we also need to think about how farmers are treated in this supply chain. So if we're talking about a situation where a farmer is having to deal with retrospective price changes, bullying, products being rejected without any sufficient reason, things like that really have to start changing. It's great that we've now, as part of the National Farmers Union, we've now got regulation in dairy contracts. So there used to be crazy rules out there, such as even if you die, you have to continue supplying us with milk. It's good to see those regulations are now starting to be pushed out of this industry, but there are many left across a lot of these sectors. They're really not helpful.
Yeah, you mentioned regulation. I mean, what is the role of policy and government here? I know we always talk about policy as a key enabler, but are we seeing that happen? Is that really translating in order to be able to design effective collaboration across? Richard, I feel like you want to jump in.
Well, there's an open mind to it, definitely. Certainly, we're European, so we get to talk to Brussels quite a bit. There is an open mind to it, but it's an insanely complicated mix. So you've got huge just breaks on the system, whether you look at regional level, food policy goes down to city level in some cases. So city, region, country, Europe, global. So yes, but at the moment, there's no really simple answers. We're starting to see some ideas of test beds, policy test beds to allow people to grow differently. But there's some really crazy things. Like if you're a regenerative farmer, you can't graze poultry on the grass that your cattle were grazing a few months before. And yet that is exactly what you need for that land in order to make the most of it. So there are some very easy fixes, but they're not coming through yet. But there is an open mind to understand what that could be.
Abi, Daniella, and then Leonardo, I know you have something to jump in.
Well, I was just going to talk about the commercial delivery of partnerships.
Yeah.
I think it's really important that they're activated in an intelligent way. And Abi, you mentioned we miss food service. I also think we often miss the consumer in this conversation. And so we start as retailers from the consumer perspective, because if it doesn't sell, then it doesn't last. And so that's the role of the retailer, to not just manage the supply, but also co-create the demand with consumers. And I think for us, where it works is where we go, like I said, beyond the pilot, but also beyond the category, to look at win-wins. So we have a business in Delhaize in Belgium who work with a bakery on regenerative wheat. And like you said, Richard, it's a multi-year investment, but now that wheat is coming back into our stores. Not only is it something that we can talk to our customer about, but it's over half less of a carbon footprint, and Belgian wheat as well. So it's kind of ticks short supply chain, great customer story, and decrease in our overall carbon footprint. So that sort of win-win commercial case for partnerships is super important.
Yeah, Leonardo, did you want to maybe?
Well, for me, I think it's a bit building on what they both said. I think even our previous speaker talked about how trade negotiations and policy were negotiated over a year, 18 months, and now it's 24 hours sometimes. So I think what the farmer, the supply chain needs is clear predictable and stable policies, right? They also send the signal upstream. And in the meantime, the players in the industry are trying to navigate that and send long-term signals as well to the farmers. In fact, if I just think one example, I think we're working with 140,000 acres right now with PepsiCo in Iowa, in the US, which is a long-term commitment. So that type of farmer makes multi-year investment. They need to buy equipment. So if you have the private sector working alongside policymakers on long-term, predictable, clear signals, I think will go a long way.
And when you say long-term in Iowa, is it 15 years? We have a question on 15. Is it
long-term for me is 5 to 10 years.
5 to 10 years? Yeah, it's interesting because it's the certainty, it's the ability to have stable policy to be able to plan for the future. Because that's a question we've got here around. I was once told that truly sustainable relationships were 15 years or longer, which one rarely sees in contracts from retailers. Is that something that's going to change at all? Is there too much of a trade-off there in terms of a long-term commitment in terms of negotiating with farmers and retailers? So Daniella and then Abi.
Yeah, I think it's tough because there's not just one supply chain. So we have direct to farmer, we have offtakes, and we trade through CPG, so FMCG partners, and so it's different models of supply chain. So I absolutely think there's good opportunities, and I've named some in the Netherlands and Belgium where those supply chains are shorter, and therefore those relationships can be longer term. But the systemic challenges of how food is bought and sold is definitely a barrier currently, I think. And I guess certification is where we start on that. And we use certification quite heavily because we're such a large retail group. But it's just the floor and not the ceiling. And when you see true collaboration and longer term collaboration, it's the move from that kind of certification floor to the partnership. That's what really shifts the dial, I think.
Yeah, I would concur. It depends on what you're supplying as to how long that needs to be. I don't pretend to have a huge amount of knowledge into apple growing, for example, but you'd be talking 8 or 9 years before you start to turn a profit from that. So that's going to need a lot of confidence. Whereas perhaps, if you're looking in the broiler sector, it's slightly different. There's a quicker turnover. Having said that, there's a huge amount of investment. I think the key thing is, whichever chain you're in, there needs to be plenty of choice, but there also needs to be a mechanism built in there for future investment so that farmers can really fulfill the ambitions, not just for their own farm, but for whoever's retailing and, of course, for the consumer.
Can you share an example, Abi, of where you've seen some of this win-win that Daniella was discussing in terms of maybe different sectors or working within the sector to be able to really say that was difficult and we achieved that through collaboration?
Sorry, can you just say that again?
Could you share an example of a successful collaboration?
Successful collaboration. I think we have got some good examples in the dairy sector of retailer alignment, where I do feel it's been a bumpy road, and I speak personally as an aligned farmer. It has been a bumpy road, but there has been confidence that's gone back into those suppliers, and it's roughly 10 to 12% of the dairy industry here in the UK is an aligned supplier. So it effectively helps that farmer feel much more connected with the retailer and ultimately the consumer. And it does give them confidence. If you go into a bank and you say, I need to borrow money, then you have got that backing behind you. So I think that's quite a good example. It would be good to see some more of that.
Yeah. Richard, I know you've done a lot of work here. I know we've talked about public good as one of the key ways to design a collaboration that's successful. What are some of those other principles?
Yeah, one thing we see is there are many different benefits that come from a collaboration. And again, if we take regenerative agriculture, when you've got a retailer at one end that needs to redesign products ultimately and bring consumers into a new set of products with new benefits, all the way through to farmers who have to make significant investments and a lot of change in practice. As you bring that value chain together, if everybody wants the same thing, it's really, really difficult. If everybody wants, say, the carbon credit from that transformation in field, it's very difficult. If you bring a collective together that actually want different things from that, so we work with Cargill Foundation actually in one of our landscapes alongside commercial partners. So not everybody is going for the commercial objective. Some want offtake agreements, some want carbon, some simply want to move the agenda forward. The farmers want new opportunities. So that diversity of benefit in the collaboration is really important. And that, again, helps the collaboration work much, much better.
Yeah, so that's interesting. So public good and diversity. Everyone wants different things, but different benefits of the collaboration. Leonard, would you add anything to that, Leonardo?
Maybe if you allow me, just I think the way we try to look at it, it has to persist longer term beyond the incentive. So if you think about, for example, in North America, we have engaged probably 2.4, 2.5 million acres in regenerative agriculture. And you see, I'm not sure the right word, the stickiness of the change in practice when the farmer begins to realize that the incentives that were sent to him, how you rebalance that risk, have breached the transaction risk or the transition risk, I'm sorry. Because that is the biggest part that we need to jump. And if you can overcome that, you will see that over time, that change persisting beyond the incentive is what will determine success.
Yeah. So that's an interesting point, because there was a question here as well, and something we discussed, which is it's not just a transition. It's not a one-off. It has to be continuous incentives. And so that's sort of what you're doing with that long-term relationship. It's not just a one and done, we've transitioned to regen ag or whatever we're trying to achieve. It has to be continuous.
Yeah, what I was going to say is, yes, you need an incentive to kickstart things, but then you create other incentives that is self-fulfilling in terms of the farmer is seeing the incentive for him or her to continue doing the same thing.
Yeah, just to build on that, at the moment, especially in arable, if you're the regen pioneers, they're growing maybe 20 different crops to produce 2 or 3 main crops. So those additional 17 to 25 crops, there's no markets for them today. It's crazy wastage. If you could valorize everything that the farmer does, just in terms of the crops they sow, you'd create probably a significant amount more profit than they're getting today. Then you add in carbon benefit, biodiversity benefit, a bunch of tradable public goods. Suddenly you don't need incentives anymore. And I can see a question here about Eurocentricity. It's a very Eurocentric model to subsidize things. Actually, the vast amount of the world has no subsidies for this transition. They've got to make it work under their own steam. So we're really trying to push for this mindset change of don't keep pumping money into the system, grow the money. The money grows on the field. You're just not using it today.
Yeah, it has to be sustainable from a time perspective as well. Abi, Daniella, anything to add?
Well, I think this is all highlighting perhaps what came out in the farmers' breakfast this morning, which is there's quite a big chasm between what farmers know and do and what the rest of the supply chain might know and do. And some people may not understand why we grow certain crops in the way that we do, but then we may not really understand how you commercialize it. So if we're talking about collaboration just in its basic sense, it's about having better communication so that we can understand each side of the coin.
Yeah, so communication is critical as well.
Yeah.
And shared benefits. Daniella?
I might just say I've just someone put my name in a question, so my eyes have been looking at that question.
I can read it out loud for the audience. For Daniella, you're at a listed company. Are your shareholders in favor of long-term systems thinking, or are there tensions there?
Yeah, wouldn't it be great if I could say yes? All of our shareholders are long-term systems thinkers. I would point to, related to the last question, the financing. When I look at our debt that we draw down as a company, all of it is either sustainability-linked bonds, green bonds, or revolving credit facilities with sustainability-related KPIs. So whether that's healthy sales or carbon reduction. And so we're building this framework where regenerative ag and long-term partnerships feed in and are rewarded by the financing that we get. And in terms of our shareholders, I spend a lot of my time talking to shareholders. They are holding us to account like never before. We're a Dutch business, but with the majority of our revenue is driven through the US. We have a lot of big retail brands in the US. I do notice a difference between the European and the US shareholders. But on the whole, they hold us to account. We're in Nature 100, which is an investor group looking at the impact of businesses on nature. They ask us about risk and opportunity all the time and forward our work in that area. We have a lot of investor focus on climate as just as a business risk, and so that's the lens that our investors are coming in. I think on the whole, and of course through the kind of global benchmarks like CDP and Sustainalytics, we're being constantly evaluated on how we're performing in this area. So I'd say yes. Would I welcome more? Absolutely. I think that we've got a way to go before we can say that all of our shareholders are long-term focused on how sustainability drives business resilience.
And what's the role of the consumer there? If you're seeing consumers want to make these changes, is that going to be enough to convince shareholders? Does it help with the bottom line? What is the consumer's role here?
I think, the consumer has to buy this stuff at the end of the day. And I think I mentioned sort of intelligent commercialization and some of our brands, and you could argue in more mature markets like the Netherlands, like Belgium, are really showing that we can make the transition. I mean, if I look at our Albert Heijn brand in the Netherlands, they're looking at, we have an overall European animal plant-based protein split because we want to balance the diet or shift the diet to a kind of more level plant-based protein split. So we have a regional target, and then the brand in the Netherlands is going faster than that. And the way they're activating that is through blended products, mixing plant and animal-based protein, which lowers the carbon impact of the product. Really amazing opportunities in own brand, working with suppliers on innovation around own brand plant-based, which is really working for consumers. But it's not a straight line. It's a very wiggly line. And as we try and balance the basket, if you like, we see these huge disruptions in consumer trends, like the fact that we think we all need to eat more protein, and that comes from animals. So we have these spikes in animal-based yogurt drinks and stuff, with young people buying more of that. And the retailer's role is to foresee that, which we do, and to plan accordingly and use the tools that we have at our disposal. Like pricing, making sure healthier, more sustainable products are priced, have price parity, like loyalty and rewards, and making those behaviours stickier. But it's a tough, slow, and non-linear journey with the consumer.
Yeah, and it has to translate all the way upstream. There's an interesting question here on consolidation, and also we've got about 7 minutes. I'd be keen if you have questions. Feel free to raise your hands. I know there are a few coming through Slido, but there is a question here on collaboration and consolidation. Is there a risk here as you're collaborating upstream and across the value chain? Does further consolidations of farms and processors, is there a danger in this concentration? Anyone want to jump in?
Well,
Leonardo?
Yeah, I think there's pros and cons in everything that happens, right? Maybe I'll get a little bit personal and then talk about some real life example, because there is a question here: who has been on a farm?
Yes, I wanted to open that up
in the last 12 months. So I happen to be Brazilian. I come from a farming community, and then have uncles, aunts that farm. I was there in December. Have a dairy farm. Uncle who I was mentioning to one of us, he's about to give up. Prices have been tough for a very long time. He said, I don't know what to do. I think I'm just going to retire and sell it. And the children do not want to have the same life that they saw their dad struggling. And so I think he will sell the farm, and there's going to be consolidation, which in my opinion, it's a little bit sad. On the other hand, I have another uncle who farms row crops and has been in a different type of track. In fact, even on the Regen Ag, there was a little dry spell. My cousin who was on the farm sent a picture of a deep root plant and said, here's our insurance against drought. And so I think the innovation, the support, the signals for when things are working, it makes you feel so good about the future. And at the same time, there are places and things that we are really lagging behind, which we need to find a way to solve it together. I think it's a long answer, but I think it's pros and cons for both sides.
Anyone else want to jump in?
Yeah,
Abby?
I would concur with that. Consolidation can offer a lot of opportunities, but perhaps consolidation in farming is not the best, because farmers get so much strength from their neighbours. If something goes wrong, if there's a tragedy or a breakdown or something, it's your neighbour that's there to pick you up. And I think we overlook that at our peril, really. I just wanted to go back to the comment as well we had about it's important to respond to consumers. I think there's also a role for retail and food service to help that consumer understand the value of seasonal, local, the ability of a country to produce certain products. Wales is a very red meat and dairy nation, and it's because a lot of our land is less favoured area. It's trying to help the consumer understand the value of that.
Yeah, this is an interesting one. If you look at the innovation frontier, actually you can use it to relocalize and downscale, therefore enabling to use much more locally produced specific products. So we're seeing, for example, it's one of our startups, they're producing on-farm bioreactors to produce proteins and enzymes and things like that. So a farmer could choose to actually change their model or complement their model with technology that in the main is thought to be large-scale industrial technology. So it depends where you look, but from an innovation perspective, there's a lot that allows us to redistribute a lot of the wealth and not centralize it, enabling farmers and other parties in the value chain to rethink business models quite dramatically.
And diversify, and complement.
Again, this diversity, back to resilience. What's foundation of resilience? Diversity.
Yeah. Speaking of, I do want to see how many people in the room have been on a farm or had a conversation. Well, let's say, and had a conversation with a farmer in the last 12 months. Show of hands.
That's great.
That's pretty impressive. Yeah. Abby, I can see you did raise your
Fantastic. Thank you very much. Genuinely, that means a lot to farmers. So thank you.
Yeah, it is really critical. We do have conferences and we do leave out the voice of the farmer. I see we have a question there, the gentleman in the front row, and then I'm trying to see if there's any other. Yeah.
Yes, thank you very much. Tom Allen Stevens, British On-Farm Innovation Network. We've heard a lot about risk today. And also, Richard, you were talking about the innovations that are coming into agriculture and the wealth of innovations that we have. But the risk is entirely borne by the pioneering farmer when they take those innovations on farm. Now, you've heard a lot about this today, Leonardo. I think you must be getting the impression that you're not doing enough to encourage, to share the risk. So what are you going to take away from today? What change are you going to make? What are you going to do better in order to share that risk better?
Thank you for that question. I mean, we can start with you, Leonardo, but I'd love to hear from the rest of the panel as well. Just general thoughts on one or two key takeaways, but starting with you.
Yeah, I think, fair question. I think we're here to try and find that path. If you look, I think I gave an example, for example, in North America, 2.4 million acres. I think we just started a program with Mars in Poland, I think a few thousand acres, now expanding to another 16 countries. If you look at the overall path, and we have made trials and errors, the overall path that has worked the best is when you are efficiently transmitting that signal upstream so that the farmer can de-risk what the risk that they are taking, and you're able to bridge that transition. This is what has worked, along with agronomic support. One other thing as well, which is underestimated, I'll be quick here, is just farmer trainings. In Cargill, we have offered over, I think, 7 million farmer trainings across the globe. So that is huge, impactful. So,
yeah, signals, trainings, critical. Abby, from your side, key takeaway.
Yeah, just quickly coming into my head, if nothing else, we can share more information. So, for example, if a dairy farmer is doing 18-month forecasting on their volumes, why isn't the processor giving that collective picture back to the farmers of what they expect? If somebody is looking at a long-term crop rotation, why aren't they getting feedback from that processor about what quality is, what what rejections have happened throughout that time period and what they can do in the future. So sharing data is quite cheap.
Richard.
I think setting expectations, but understanding, so that understanding is growing. You can't have a regenerative carrot, but you can have regenerative soil and farms and a value chain that works together.
And Daniella, final key takeaway.
Yeah, I think you're right. We have been talking about risk a lot, and I was just thinking about why is that? We should be balancing it out with opportunity as well. And I think we talk about risk so much because we tend to build our business cases, financial cases on risk as well as opportunity. So in our business, in many retail businesses, we're looking at bottom line as well as top line, so risk and opportunity. And I think we need to unlock the funding. So spending lots of time with the financiers, make sure that the farmer's voice is in the room and included in the conversation, and also the consumers are represented, because if it doesn't sell, then it stalls.
Yeah. Thank you for that. I know we're over time, and I'm sure the panel, I'm voluntarily offering you up for questions after, but I do have to keep us on track. But Leonardo, Richard, Abi, Daniella, thank you very much for joining us today, and appreciate your insights.
Thank you.